Good evening, everyone. Welcome to the webinar. My name is Kenna Danielle. We're going to have a great webinar on strategy building for Canadian dollar crosses, also known as the loonie. We have many people already joined us. Welcome, Adrienne, Bafana, Khalid, Kabusnik, Zanilson, Melissa, Mohammed. Welcome, everybody. Before we start, can you please give me a shout out? Type in a Y for yes if you can hear me, so we can go ahead and kickstart today's webinar. This webinar is certainly live. Thank you so much, Nick, for your response. And we're going to answer your questions if you have any. And I'm going to wait a little bit longer before we have, it seems people are joining at the moment. Right now I'm in New York. It's 1 p.m. Eastern time. And so first, let's see where our audience are from. I can see some of our audience are actually Investiva students. Welcome. And so do we have anyone from Cyprus area? How's the weather over there? Where is everybody from? All right, so let's just type it in the chat so I know that everybody is. Also, we have people from the UK. All right. Welcome. We have people from Dubai. That's awesome. All right, welcome. Okay, so South Africa. Perfect. Very international crowd. Brazil. America. All right. We are basically all over the globe. This is awesome. And everybody's here to learn about Canada. Do we have anybody from Canada in the crowd? That is going to be interesting. We don't have anyone from Canada, and yet everybody's learning about them. So great stuff. We're going to kickstart our webinar. Before we start, though, I'm obligated to tell you about the high risk of Forex trading, especially if you're trading a margin, which is also called leverage. It multiplies your losses as well as your profit. So you really need to calculate your risk management and your risk tolerance properly before you trade on margin. And today's commentary and today's webinar is obviously my personal ideas, and you are going to trade at your own risk. All right, I hope everybody is clear on that. We do have great courses on Investiva.com to calculate your risk tolerance. We will talk about that later. But, all right, a little bit about me. Well, this is what I look like. I'm the CEO of Investiva. I used to be an electrical engineer. I studied that in Japan. As I was studying, I got introduced to Forex trading. I made $10,000 as a college student in 2008 market crash. I got very interested in it. So I moved to New York City. I worked on Wall Street for quite a few years, and that is how I realized the need for a proper Forex education, and that's when I founded Investiva. Right now, I'm a professor of finance at universities in New York. You have probably seen me in, well, many international medium, including Forbes, CNBC, Wall Street Journal, Times, CNN. I'm also quite often featured on Japan's one of Japan's highest-ranking financial TV shows. Anyone from Japan today? Welcome, Ziad. All right, welcome, Xavier, Michael, Melissa, Caboose. All right, it seems we have enough amount of people to actually start. And okay, so one final thing about me. Modestly, I'm humbled to have won multiple awards for our education courses. All right, so today's agenda. We are first and foremost going to take an overlook on Canada's economy, because obviously the first thing that you need to keep in mind when you're trading a currency of a country, you need to know about their economy. So we're going to give you an overview. Then we're going to take a look at upcoming risk events in Canada, and that could affect Canadian dollar. We're going to talk about oil. because oil directly affects Canadian dollar. And then we're going to do a live technical analysis on, I think we're going to have three major CAD crosses: dollar CAD, CAD yen, and Euro CAD. If we have enough time, we may dive into other currency pairs that you request from us to cover. All right. Are you ready? Everybody has their notes out. I also recommend that you have your Orbex demo account open as well, so that when I give you the tips and the technical levels, you can immediately, well, mark it at least on your account, or you can have a notebook or notepad or iPad or an iPhone or what have you, just to make sure that you take away what you need to take away from this webinar. All right, everybody's ready? Let's get pumping. All right, so the first thing that we want to talk about, well, the most recent thing that came out of Canada was Bank of Canada's policy statement. And so it was a top-tier catalyst. And so when you're, here are 3 points, basically. There were 3 points that were mentioned in the policy statement that is important for you to know. So first is that no policy changes in September. Well, nothing happened, but so despite skipping a meeting in August, so people were anticipating something could happen, but the Bank of Canada didn't feel any pressure to up its stimulus game in September. The central bank decided to keep its overnight rate at 50%, the bank rate at, I'm sorry, not 50, it's 0.50%. The bank rate is as 0.75%, and its deposit rate at 0.25%. And Stephen Polis and his team didn't shy away from dovish remarks. And for starters, the central bank acknowledged that growth in the first half of the year is not as rosy as it had estimated in May. They also called the weakness in Q2 2016 growth due to drops in oil exports and wildfires in Alberta, the city in Canada. And they were more generous. The Bank of Canada's members were more generous about inflation. They said that it's still roughly in line with its expectations. However, they also recognize that lower consumer energy prices have tilted the inflation risks to the downside. There's less risk, inflationary risk. But last but not least, the central bank is expecting a rebound in Q3 2016 because as the oil production picks up. So this is according to them. We're going to get into oil a little bit later as well. And so they're expecting oil production to pick up, Alberta recovering from fires, and consumer spending getting a boost. So they basically had a little bit of a positive outlook on Q3. However, the Canadian dollar, the loonie, fell across all its major forex counterparts. The market players didn't care for Bank of Canada's dovish markets, and much like in July, as it happened, the central bank's dovishness set the tone for the loonie price action in the next trading sessions, and that's what we saw. We're going to take a look at it in the technical during our technical session, see how it affected it. But well, looks like the traders didn't like what they heard. And so we already have the Bank of Canada decision. And so Bank of Canada already downgraded after we got the meeting minutes overnight. They maintained the lending rates but cut its GDP outlook for 2016 to 1.1%. And so they, as we said, they held the interest rate at 0.5%, but the economic forecast through 2018, so next year, they're predicting a slower housing market and conceding the export sector is not rebounding the way it anticipated. So we basically have two sets of anticipation, and maybe that is the reason why Canadian dollar got the shock that we saw was because of the longer term outlook on Canadian economy. And so one of the reasons they said that the economy would grow slower, they said it's due to housing and exports. And so the projections see that housing and exports should go lower, which is pretty interesting. I mean, well, Canada is right above the U.S. where we live right now, and probably a lot of you are already familiar with the U.S. elections, and that a lot of Americans are thinking of moving to Canada if Donald Trump becomes president. But it seems very, very unlikely now that Donald Trump becomes president, and therefore we probably so I believe actually Donald Trump becoming president in America would boost Canada's economy, but now with evidence that Trump will probably lose, that will not help Canada's economy. So this Bank of Canada's anticipation of slower housing and exports is probably accurate. All right. We have more people joining us. Veronica, welcome. And so one other thing that I definitely wanted to talk to you about is oil. And oil, as you might know, very directly affects Canadian dollar, and lower oil prices affect the Canadian dollar. They have a reverse, a direct correlation. Just bring that up. So with that, excuse me. All right. So yeah. So the value of Canadian dollar declines relative, especially to the U.S. dollar, as the price of oil falls, and we saw that before 2016 in 2015, and then as the oil prices went up, we saw the Canadian dollar value also went up. So there's a positive correlation between the two variables, the Canadian dollar, US dollar exchange rate, and the oil prices. So what is going on with oil? And well, this is from a very secret place that I got my hands onto. So oil markets are living in the world of the South Sea bubble. The Dutch Tulip Mania and Mississippi Company, these are all companies with speculation is allowed to rule. These rallies of oil are fun while they last for those riding the wave, but you don't want to be on the wrong side when oil prices or oil growth ends. And so second, free money from central banks has destroyed markets' role of price discovery. Instead, speculation rules and the fundamentals of supply and demand no longer seem to matter on a day-to-day basis. And oil is just basically, especially WTI, so far this year, trading in just the WTI futures contracts have averaged nearly 10 times physical volume. And these aren't individuals betting their own money as a hobby. And the main volume is from hedge funds with deep pockets who aim to earn their bonus at the end of the year. So a lot of volume right now trading the WTI, and that has basically outpaced the normal supply and demand that we base our trading strategies on when it comes to oil. And when, well, more volume is obviously better for oil. But what is going on right now with WTI? We're going to check in a little bit. All right, so let's go ahead and take a look at the markets and do a live technical analysis. Do we have any questions so far? All right, it seems we are good. So just take a look and bring up our charts. All right, so first actually let's take a look at WTI. Oh, one thing that I did forget, forgive me, it's a little bit hectic today in our office. People are yelling and shouting. I did want to go through and take a look at details of Canada's economy. You can find this economic calendar on orbix.com or Epic Street. They use the same economic calendar. What I do want to do is filter for Canada. And all right, hopefully this is going to work at some point. And Canada, where is Canada? There it is. We're going to look at important. We're going to filter from beginning of October until we'll want to see what else is coming up. And there we go. Filter results. So what is going on? So the main recent risk event was yesterday, the rate decision that we already talked about. The rest, what has been going on? So international merchandise trade came in better than expected beginning of the month. And then we had the net change in employment. That came way better than expected. It was expected to come out at 10,000. It came out 67.2 thousand, which is much better than last time's reading as well. So these were all great stuff for Canada, which is interesting, right? Because and then the housing starts was also better than expected. And but one thing was new housing price index was down from the expectation from last month. And the manufacturing shipment was actually above. So that was actually pretty interesting that the Bank of Canada went ahead and their statement downgraded the Canadian dollar while we had, well, better than expected results prior to that. But the fact that they kept the interest rates unchanged is that they just want to wait and see until the riskiness, especially probably in the U.S., has gone away. Coming up on the economic calendar, well, tomorrow we have the CPI, which is a very important inflation index. And so probably that is going to, I would assume, well, this says 1.5% is going to increase, which is, I actually think it's going to come up at the same price as last time, but well, these are market analysts. And so that is going to be a market moving event, even though on FX Street it's marked as not very important. I do believe that it's going to move the markets a little bit. Well, we don't have much. We have only 10 days until the end of October. Let's take a look for November for the upcoming events as well, so that we can develop more longer-term strategies as well as short-term. So right beginning of November, we're going to have the manufacturing PMI, the participation rate, the unemployment rate. So these are all very important. So this makes it a very perfect time to trade or to develop a trading strategy for Canadian dollar. All right, so let's go and conduct a technical analysis on Canadian dollar. So with everything that we said, So Canadian dollar was downgraded. Well, Canadian economy was downgraded. And therefore, look what happened. We had a massive, this is yesterday, right? Can everybody see this? First of all, can everybody actually see the chart, because it's very important. So, okay, great. So here you can see that yesterday, CAD, dollar CAD, this is the dollar CAD chart, actually bottomed out. This shadow of this candlestick right over here, let's actually take a look at the hourly chart. So this is, I believe, yeah, this is exactly yesterday, right before the, this is the hourly chart of dollar CAD, right? Right before the interest rate and the policy statement came out, dollar CAD dropped a few hundred pips, and then immediately after it went back up, which is shown as, on the daily chart, is shown as a top, which shows indecisiveness in the market, but mainly to the upside because it actually closed the day above where it opened. So that is a very, very massive spinning top, followed by today, massive, massive bullish engulfing chart pattern. Everybody's okay with bullish engulfing. This is called a bullish engulfing, a massive green or bullish candlestick followed by a small spinning top. That shows that the market sentiment has changed, and that we could see a change or a reversal perhaps in the short term. But again, as everybody knows, so for example here, let's just do a technical analysis on previous. Every time a bullish engulfing happens, here we had a bullish engulfing, it continued on for the next day, but then you have a correction. So here we had a bullish engulfing, it went up for the next day, then we had a correction. So we can expect the similar thing to happen with Canada every time a bullish engulfing happens. So here again, on the 10th of October, this was a little bit weaker bullish engulfing, and then the second day went up, and then it reversed again. But what we can see is that all of it, all these bullish engulfings and then correction, bullish engulfing correction, is actually moving inside. Who spotted this? It's moving inside an upward channel. Let's identify that. There you go, parallel channel. It's actually moving inside a parallel channel, and that means that the overall long-term market sentiment is actually top. So this is your first step when you want to develop a strategy, whether long-term, short-term, medium-term. You want to know what's going to happen short-term and then what's going to happen long-term. And from what I've already said, who can tell me what's going to happen, what is likely happening tomorrow? So we had a bullish engulfing, massive, strong bullish engulfing. What is likely to happen in the next period? What kind of candlestick we might see tomorrow? Is it going to be bearish? Is it going to be bullish? Are we going to see a continuation of today's bullish sentiment, or are we going to see a correction? Let's see who's got the answer. Retrace. So we have answers retrace, we have continuation, we have bullish. All right, so many different answers. So from what we saw already, from what we saw before with dollar CAD's habits, is that after a bullish engulfing, for example, here we have a bullish engulfing, most often next day reaction is actually continuation. A little bit more bullish and then retrace. So everybody was correct, all of you, but continuation then, yes, Melissa, yes. That is correct, continuation and then retrace, of course. Investiva students are the best. Okay, so that is exactly correct. So that is what I believe is most likely going to happen. Again, I could be wrong, but from what dollar CAD has done before, this is what pattern we have seen every time. Even here, like back in June, July, bullish engulfing, continuation, and then retrace. So this is going to be our first signal. Now I would like to go ahead and add an Ichimoku, my favorite. And by the way, I'm writing a new book on Ichimoku Cloud, Ichimoku Secrets, which is going to be followed by an Ichimoku course. I know many of you have already signed up in the waiting list, but it's coming up. I'm almost 70% done with the book, so that is coming up. It's fabulous, fabulous secrets on many years that I've been using it. And it's nothing that is out there. There is nothing like it. I'm really excited about the book. Anyway, so we just added the Ichimoku Cloud. And so we saw the break above the Ichimoku Cloud and the confirmation above it back in September. And needless to say, the pair has continued above it. And also, one other thing that we saw that was even more important is the break of the lagging, the span line, the Chico span above the Ichimoku Cloud as well, which was around here, which also confirmed our long-term bullish sentiment. So with that, let's go ahead and identify our levels. Let's see, actually, one more thing that I would like to add to this is the Fibonacci retracement level, so that we have a more clear idea about the long-term levels before we get into the dirty details. So these are our long-term Fibonacci retracement levels. We're going to add the 23%. This is our pivot line. You can even call it our support line. So pivot, we're going to have it a little bit thicker so everybody can see it. This is 23% Fibonacci level. Next, we have 38%. Right over here. So this is going to be our, well, this is actually our resistance. All right. So these are some of the main levels they need to keep in mind. And then an extension in our extended resistance level is at 50%. I do think that this is probably a little bit small for you. Let me see if I can make this a little bit larger. I've heard complaints about not here. Getting bigger. No, the numbers aren't getting bigger. All right, so since the levels aren't getting bigger, I'll just write it down for you. We have a question. Please put the levels on screen so we can see it. Yes, Veronica, I'm actually trying to do that. So since it seems like you can't see it, let's do this. Let's, is this better? 1 second. All right. So our pivot is at 130, almost 20. So I'm going to write it down in the chat box. The pivot is at 1.3020. This is for $CAD. All right. Then we have our long-term resistance level. All right, so long-term resistance is at 133, almost 20 again, 133.20. Okay? And then we have, oh, is everybody getting? I don't know what's going on. Oh, okay. And then we have the extended resistance at 135. I would go with 50. 135, 50. Okay? All right, so these are the long-term levels. So what we can these are for long-term traders, right? So if you want to get in, which I actually don't really recommend getting in. I mean, you could. It's going to be, you can get in today. Tomorrow we're going to see perhaps a little bit more of a continuation up to, we're going to use another Fibonacci to see how much longer. This is our newest trend, right? Oh, so this is not going to help. So we could see a little bit more of a continuation perhaps towards previous. So this is our first 132.30, and then if it does go higher before retracement, well, the next one would be 132.76. All right. So short-term bullish targets are, I'm going to write it down for you again, 132.76, 132.76, and 132.30. All right, these are short term. And then for longer term, so after this, so tomorrow what's going to happen is that you're going to check and see if the continuation happens, and then we're going to wait for the retrace. Then again, we're going to have an opportunity for short-term traders, because guess what's going on? What is going on is that the market, this pair, I mean, unless something crazy happens, this is just a forecast that we think might happen. So this is a little bit less, let's say, the possibility of it is lower than the bullish strategy. But so once we get to either 132.30 or 132.76, there is a good possibility, let's say a 40% possibility, that the pair starts to retrace and go back down. So that is going to be an opportunity for short-term traders to now go bearish, very short-term, but go bearish, and again target one of these levels. Just pick up a few pips, and just get out of the market. All right, but the matter of the fact is that the market is right now basically ranging within this upward channel. So another strategy for longer-term traders is actually wait for it to even perhaps reach 133 or even the higher band of the channel, right? So this is another strategy. You can either, again, get in if you have higher risk tolerance. You want to do a longer-term trade. You want to get in, well, either now or wait for the retrace and get in again later. Target 133.27 or maybe even the upper band of the channel, and then get out. Then over there, you can again expect another retrace going back to either of these levels. All right. So the best thing about a range trading or a market ranging is that, I mean, there is no, if you're long term, if you do a medium term strategy, you're not going to go wrong, right? Because if you wait long enough, your position is going to fulfill. So that's the beauty of when you identify a range trade. It's great. And right now, with Canadian Bank of Canada downgrading Canadian economic growth, we could expect further weakness in Canadian dollar, which would, well, potentially, but it's going to be gradual, right? And a weakness in Canadian dollar is going to push the U.S. dollar CAD pair higher. And also, we have in the U.S., we have the elections going on, and again, I mean, we're not going to talk about that today. That is for next week's webinar. We're going to dive into the elections and the impacts on the U.S. dollar. But just briefly, with a win for Hillary Clinton, that could impact the U.S. dollar in a positive way. that will also get our bullish strategy for dollar CAD in the long term will be justified furthermore, because we already have the technical point of it, right? The long-term technical point was this break above the HMO cloud, and then the next, our next signal would be a break above the 38% of Fibonacci level. So if you're a very long-term trader, let's say if you're, I mean, I am an incredibly long-term trader. I keep my trades open for a year or so. So a break above 133.27 could open doors for further bullish moves towards 50% Fibonacci, which is the most important level of them all, at 135.60, and then we could see a little bit more massive of a retracement before it moves back up. All right, so this was the daily chart with dollar CAD. We talked about a very long-term trades. Let's take a look at a very long-term view and the habits of dollar CAD over the years. I'll just take a sip of my coffee. All right. So what happened recently? So since, not recently, but since 2012, this was the all-time high of dollar CAD at 160. This is the weakest the Canadian dollar had gotten, and the US dollar was worth 1.60 Canadian dollar. If you were an American, you went to Canada, you basically could buy everything that you wanted with a discount, with a 60% discount, which is great, right? And then it went on a downfall in 2007, 2008, and then it corrected itself a little bit, couldn't hold it, went back to the all-time lows of back in 2007. So 2011, we saw the all-time lows once again. And then, and this is the monthly chart, we saw a massive break above a very thick Ichimoku cloud, which is a very long-term bullish signal for dollar CAD. And we've talked about this before. This is a double bottom, right? A very long-term double bottom right over here. So this is the first bottom. This is the second bottom, right? This double bottom, the neckline was right over here, which is right now our support, right? But look, the neckline actually, if you look at the shadow, is actually our pivot level. So we're very close, again, back to the neckline of this massive double bottom on the monthly chart right now. This is right. This is where we are right now. This is where this month dollar CAD tested. This is our 130 level. So looking at this massive, again, dollar CAD chart, we can see that after it broke above the Ichimoku cloud, again, it retraced, it went back up, and then we had 3 consecutive months of retracement, and now it seems like it's going back up. And I believe that there is a chance that we could see action in the very long term, and after the U.S. elections, well through the 2018, we could see this pair moving back up and completing the cycle of double bottom. And double bottoms normally are completed the same length from the bottom to the neckline. So that would be actually going back towards the previous highs of back in 2000. So that is a very long shot. I don't believe that 157 is going to be quite possible. But what I do think is possible is actually seeing probably 6 months from now a move back up to the 144 level. All right, so there you have it. We did the long-term, short-term, medium-term for dollar CAD. Next, we are going to move on. What did we see we're going to cover? We said we're going to cover, oh, okay, dollar yen. No, I'm sorry, CAD yen. All right, this is the monthly chart. We're not going to take a look. We're going to again start with the weekly. I'm sorry, daily. So here, Canadian dollar is quoted first, so the Canadian dollar's weakness is more apparent for people who have a little bit of difficulty understanding how it works. So when Canadian dollar gets weaker and it's quoted first in the currency pair, then that pair goes lower down. And so let's see what's happening in CAD yen. It broke below the HMO cloud, while at the same time dollar CAD broke above, dollar CAD broke, below the HMO cloud. Same time, no, it's not actually. This is July. It broke below the HMO cloud the same time. The dollar CAD broke back above HMO cloud, right? So this is basically showing this Canadian dollar becoming weaker again versus the Japanese yen. It has tried to break above the HMO cloud. It hasn't been able to. So that is an indication that perhaps this Canadian dollar is still under pressure, which also proves our forecast on dollar CAD as well. It was not able to break above the HMO cloud. Right now is testing to break out again out of the HMO cloud, right? So here I would wait again a little bit more. Let's see what else we can see. So I would actually want to zoom back out and see where this market has been going. This market has been a little bit less coherent. So we had a double bottom back until 2011, completed actually, and now it's on a downfall and it's moving back towards the previous lows of 2011. So this is our very long-term support level at 73.40, right? And then I would like to add a Fibonacci retracement level to see what other levels we have to keep an eye on. This would give us an indication of where the market can retrace it, but this is very long term. As you can see, even on the monthly chart, the pair is below the Ichimoku cloud. And so this didn't really give us much of, I'm just going to point our resistance, and I'm going to clear out the Fibonacci. Okay, what else do we see on the long term? So the most important thing that we see is that this is trying to complete the cycle, going back to the lows of 2011. And that is perhaps it, right? Do we see anything else? No. All right, let's go back to daily chart. Back to daily chart. I'm gonna clear the Fibonacci out. And so other pivot levels. We can see that this market has been also the higher highs have been dropping, right? So here we've had this high, and then the next high went a little bit lower, and then the next high went yet again a little bit lower. All right. Right? So if we connect these lower highs, we get a downtrend. And actually, in fact, this might also be a channel. I'm going to try out a channel and see if this actually fits in. Yes, it does. All right. So while dollar CAD was on an upward channel, CAD yen is in the perfect downward channel, right? So with that, again, we can use the same strategy in the opposite side. For dollar CAD, we could range trade it. And actually, this one is pretty cool because we're already at the upper band of this channel. And the chances are, so we're going to make actually more pips if we're long-term bearish on CAD yen, targeting the lower band of this channel. But so these are my shorts. So for a bearish scenario, all right, bearish scenario. First, we're going to do a short-term bearish scenario. Where are our levels? This is a pivot again. Go ahead and apply this as a pivot. Where are our support levels? This is one support. I'm going to paint it purple. And don't worry, I am going to write down the levels for you so you can. So, well, we already reached, it already tested the support level today. Where is the next level? The next level. So that was short term, right? Short term strategy, then we have the medium term at around here, and then we have the long term. Long term bearish target. All right, so I'm going to write these down for you, okay? So I'm going to write it right here in the chat box. So short term bearish target is at 78.44. It's time for you to write it down. This is CAD yen for those of you who are just joining us. Okay. Then we have medium term bearish target. That is going to take anywhere from 3 days to a month, or even 2. That is going to be 77.75. Next, we have long-term bearish target, and that is going to be 77. All right. So when I say long-term, sometimes we get to our long-term target within a day. But the reason why I divide it like this is because sometimes we don't. A lot of times we don't. And traders who don't have enough risk tolerance cannot. So let's say we're targeting 77 and the market suddenly decides to break above the Ichimoku cloud. That is when you actually have to cut your losses short and just get out of it. But for a longer term trader, you might have enough capacity to just stay in it and wait it out. So I have very high risk tolerance with my portfolio, so I just wait it out. I wait it out for a year. I sometimes wait it out for 2 years, and I do have enough. I do have enough investments. I do have enough capacity and margin in my account that I can wait it out. If you are trading on margin, if you are trading on leverage, the higher your leverage, the lower your risk tolerance. So if you are trading on leverage, you really need to cut your losses short and get out of it before it changes direction. So right now we developed a bearish strategy with CAD yen. Let's say you are targeting right now 78.42, but then tomorrow you wake up and the market has gone back and broken above the Ichimoku cloud. You get out. A low risk tolerance trader needs to get out. However, if you're a medium-term risk tolerance, you can wait it out and see if it actually retraces back and if it was a false breakout of the Ichimoku cloud. You can wait it out if you have medium risk tolerance. If you're long-term, you can actually wait up until 83, and then it might actually come back, right? So it really depends on your risk tolerance. So we have 10 minutes to go. I want to quickly also take a look at EuroCAD. All right. Okay, so EuroCAD, this is interesting. Oh, wow, look at that. Oh, all right, I'm interested to see what's happening with Eurodollar, because this perhaps has something to do with Euro. What did I do? Euro dollar. So again, we talk about Canadian economy only. Okay, so Euro is under pressure. Oh, wait, yay. Investiva students, Veronica, Melissa, Zenelson, and so you may have had a euro-dollar bearish position, and I think you already reached your goal today. It's at 109, so congratulations. Anyway, so euro is under pressure. And so with Euro CAD, this is going to be a little bit more. So Euro is weak and Canadian dollar is also weak. So this is not this is not the best scenario, because normally you want to pair up a weak currency with a strong currency. And right now, both Euro and CAD are weak. And guess what? Even the Euro dollar is under massive pressure. A Euro CAD is actually not. So that means even though Euro is weak, Canadian dollar is weaker, right? But this is interesting, right? So we had a break and confirmation below the Ichimoku. Then we had a bullish engulfing after a spinning top. So it's a little bit of a mixed signal right now going on with EuroCAD. Let's take a look at the monthly chart and see what we can do here. On the monthly, it's actually broken above the HMO cloud. So this is like literally the definition of mixed signal. So on the monthly, it has broken above the HMO cloud, and the daily, it has broken below the HMO cloud. Can we develop a strategy? All right, I'm going to ask you a question. If you were to, so I've already gone all over with technical strategies. So who can tell me what is the best strategy right now with EuroCAD? Take a deep look right now. This is a daily chart of EuroCAD. What do you think the best strategy for EuroCAD could be? All right. I don't know. All right. That's a good answer. If you don't know, there is no shame in not knowing. What else? It's going to range in a short band. Possible. What else? Long. All right. I would love to hear your reasoning behind this, because honestly, right now, I'm pretty confused where it's going to go. But the best thing that I can do, the range was my favorite answer. And the reason for that is because the HTML cloud right now here is pretty flat. And it has been ranging between these levels. So this is the medium range. This is our medium support level, which is actually, so this has been very volatile. This is crazy volatility in EuroCAD, right? So yesterday went down all the way to the bottom of our range, and today went all the way back up to the HMO cloud. So this is crazy. But the medium upper band of our range is at 147. So I do agree with Veronica that a range. So again, so Ken mentioned long, and so that can also be correct. So the thing is, there is no wrong answer right now. I cannot. My strategy building right now, it's just wait and see at the moment. If it were up to me, and I wanted to definitely like get into a Canadian dollar trade, this is not my first choice. Dollar CAD yen would be my first choice. Euro CAD is I really don't know. It's mixed signal. Both euro and Canadian dollar are weak, and I just wouldn't go for it. But if you really want to go, you want to really be within this range. Since the HTML cloud is going higher in the forecast over here, yes, so the long, probably you want to bring down even your range a little bit. So this would be a very short-term trade. I would even narrow down the range between these two levels, and like the upper band of the HTML cloud, or maybe this resistance over. So 144 and 146 maximum, right? So that would be the range that I would trade. So Ken is asking to bottom of the cloud. Yeah, bottom of the cloud, or even like, so the reason why bottom of the cloud is it already actually got there. So this is going to be a little bit more of a confidence. The bottom of the cloud is a very great resistance level. Also another resistance a little bit higher, this previous resistance. So anywhere between this can be our short-term to medium-term resistance, while this one, I'm going to paint it purple. is going to be our support. So before I let you go, I have a present for you because you've been such awesome students, not students, attendees. So the present is that, well, those of you who are Investiva students or are already in this Facebook group, we just launched it 2 months ago. It's been great. And this was only available to Investiva students who enroll in our education course or take my private lessons or have Rick's Trading Signals. But it wasn't available to people just to get in without getting any of our services. But because a lot of people were asking us to do it, we did it. And we created this premium closed Facebook group where you can ask me personally any time of the day about my positions or your positions, what to do about it. And I send out my very private signals, what I'm doing with my Forex and stock accounts and portfolio. That is it. So we covered today everything that we wanted to. We have 2 minutes. If you have any questions, definitely do ask me right now. I am going to answer it for you. So do we have any questions? Let's actually take a look and see if any of the outcomes, any market moving events. Nope, nothing is coming out. And so far, let's go back to $CAD and see if anything has happened. Nope, so far we are on the bullish side. If you have any questions, type it here. How long, all right, I'm having a question. How long is this discount going to be available? This is limited time. So I believe it's actually only 3 days. I'm getting another question. What do you talk about in the Facebook group? So it's basically all the, you can post your own questions and we will answer. And also, I send out my own timely signals. It's a signals group. It is also a community. You can interact. And it's not only my signals, but it's also 3 other admin signals as well. And it is 20% off right now. So, right. All right. So, okay, it seems to be that we're good enough. So next week, don't forget, we're going to have a webinar on U.S. elections and its impacts on the U.S. dollar. And so we're going to do a live analysis of U.S. dollar process. And while the U.S. election is going to be held on November 8th, if you are in the U.S., don't forget to vote. And so with that, thank you so much for attending. You guys were awesome. And hopefully I'll see you next week. You are welcome. Thank you. Thank you. All right. Thank you. You're welcome. Getting all these comments. You are welcome. Kobe, Veronica, Aburalaba. I'm hoping I'm pronouncing your names correctly. Beres, Kenneth, Khalid, Caboose, Lebanal, Nick, Terry, Victor, Zenelson, Ziad. Thank you so much for today. I'll see you next time.